Hello and welcome to my morning note. What on earth is going on in China? Not only is the prospective president, Xi Jinping, apparently vanished from public life for more than a week, but also there's great doubt over the government's economic intentions. In the last few days there's been a lot of speculation that a new stimulus is underway, and that has helped stocks around the world. But I and many other people in my position always have problems trying to judge what is going on with Chinese economic policy. Not speaking Chinese and not necessarily trusting the official data, it's very difficult to know what is going on. Therefore, today I'm glad to say we have the principal of the FT's China Research Service, China Confidential, with us, James Kynge. James, thanks very much for being here today. Let's start by showing quite how much worries about China have been affecting world stock markets. The blue line, which comes from Deutsche Bank, shows you how China-exposed stocks in Europe have underperformed American exposed stocks really quite dramatically over the last couple of years, and as you can see that's largely because of that seems to be very much linked to metal prices, for which obviously there's great demand in China. What could the Chinese government be doing to stimulate, and what evidence do we have that they are doing a new stimulus?
Over the last few weeks there have been plenty of announcements by the Chinese government of big new investment projects. These are mostly being undertaken at the local level. But the problem is that the banks have shown a great reluctance to lend to those projects because non-performing loans and overdue loans in the banking system is mounting up pretty quickly. However, what we are seeing in our own research is that at the margin, some of this extra investment activity is beginning to flow through, and we are noticing extra activity on building sites throughout China. China Confidential does a monthly indicator
we've got a chart to illustrate
of
this, yeah.
overtime on the building sites throughout China.
Right.
And as you can see from this chart, this is taken from 15 cities across the country. 300 companies are interviewed about how much overtime hours are being worked by workers on construction sites. And you can see May, June, July, August, there has been a steady pickup. A lot of this is to do with residential housing, which is being built, but we also think that just recently, over the last couple of weeks, we have begun to see more activity in local government-inspired investment projects as well.
Okay, now that's, I suppose, very positive. One of the great concerns that people outside China always have is whether this money is being well spent, whether this is just wasteful overcapacity, and I suppose that's particularly true when people talk about the metals markets. I mean, what evidence do we have about demand for metals?
Well, you mentioned overcapacity, and there's no more stark an example of overcapacity in China than in the steel industry.
Okay, we have another chart to illustrate this.
In the steel industry, even the official number for overcapacity is 160 million tons of steel overcapacity.
So that's the number that they're admitting to?
That's the number they're admitting to. A lot of people think that it's more like 200 million tons, which is an astronomical figure. It's about America plus Japan's annual production combined. This is overcapacity in production capacity, but the inventories are also very high indeed. This is steel sitting in the backyards of factories all over China is about 14 million tons at the moment, and as you can see from the chart, it's much, much higher than it was back in 2007. This is a very, very high number. So what we're saying is that even if investment in building sites picks up, and investment in building railways, etc., picks up, it will not necessarily have a big supporting effect on steel production in China because inventories are so high. Those inventories will need to be drawn down, first of all, before it begins to impact steel production and therefore international iron ore prices.
Okay, now one final question. We are supposed to be having a new Chinese leadership installed at some point in the next matter of weeks. What on earth are we to make of the apparent disappearance of Mr. Xi? How could that affect economic policy?
It really is the case that nobody knows where Xi Jinping is. The foreign ministry in China has been asked, various other official sources have been asked for their comment, and the reply so far has really been a stone wall. What I think is interesting about this is that this is the world's second largest economy. This man is supposed to be the new leader of China, or has been tipped very heavily to be the new leader of China, and now he has literally gone AWOL. The question is, can China reassure the rest of the world? When the last time that China had a big leadership transition was 10 years ago, at that time China was the 5th largest economy. But so much is riding on confidence in the Chinese economy right now that it would be, I think, very helpful for global markets if the Chinese government could give a quick explanation as to where Mr. Xi is.
Okay, James, thank you very much indeed. I think in a nutshell, yes, there is some stimulus going on in China, but we have plenty of uncertainty coming from Europe and the US over the next few weeks and months. Perhaps there may be even more to come from China.